Coronavirus and COVID-19. How does it affect your wallet? In this video, we'll be sharing the role of COVID-19 in causing a market downturn and what we should do in turbulent markets like these. If you understand the principles that we'll be talking about in this video, you'll be able to protect yourself financially from the effects of this event. And if you watch till the end of the video, you'll find out exactly how you can not only defend your finances, but also how to go on the offense and come out of this crisis winning financially. Hey, my name is Ed Lee and welcome to the Millennial Finance. In the past month, the number of COVID-19 cases have skyrocketed, especially in the US and in Europe. What followed was the largest single-week decline in the stock market since the last financial recession in 2008. Fast forward today and we are in a market downturn with volatile stock prices generally moving downward. The virus has spread rapidly in countries like South Korea, Iran, Japan, Singapore, Malaysia, and China. As a result, companies are taking big hits in their supply chain, with companies like Apple, Samsung, Tesla, Microsoft shutting down their factories in China. What is now termed by the World Health Organization as a global pandemic will take its toll on global economies and the global stock market. Now, we know that there are more important consequences and problems caused by the virus, but we'll be staying in our lane and talking about your finances. While there are many companies that are taking a hit from this virus, there are actually some companies that are benefiting from the spread. The companies that benefit directly from this situation are glove and mask manufacturers. This one's quite straightforward. With the increased need for these items in response to the virus, stock prices are shooting up in anticipation of strong revenues and profits. Malaysia's own Kosan Rubber is up 25% since the turn of the year, going from 4.25 ringgit to 5.30 ringgit. As global demand surges, investors expect an increase in sales for Kosan's rubber gloves. After all, Malaysia is the world's 5th largest rubber producer. There are also companies that benefit from the temptation of consumers to stay at home, stock up, and not leave their houses in the next 6 months. For example, many large corporations are asking their employees to work from home as a precaution. When this happens, bosses from all around the world scratch their heads and think, if only there was a way that I could get these guys to still be productive. Turns out, there is. The growing need for work communication tools like Zoom and Slack means higher revenues in the upcoming quarter. The main challenge for these companies are to make the effects lasting rather than just being one-off. But who are the direct losers of this situation? To find out who would suffer most from this market downturn, think of companies that are affected by lower demands for things like travel, leisure, and basically anything that involves people leaving their houses. Airlines are an obvious loser, especially those who have a significant amount of revenue coming in from international travel. Just this week, the US has imposed bans on all overseas travel to Europe except the UK. Malaysia has also imposed travel bans to Italy, Iran, and South Korea. In response to this, many companies in the industry have to make tough decisions to make sure that they are able to weather this storm. Malindo Air and AirAsia are cutting employee benefits and wages, while Malaysia Airlines has offered 3 months of unpaid leave. On the other side of the globe, Europe's largest regional airline, Flybe, has gone into administration, with COVID-19 being the straw that broke the camel's back. Other than airlines, restaurants, cruises, and theme parks are feeling the burn of COVID-19. The second largest cruise company in the world, RCL, is down to $33 from a high of $133 barely 1 month ago. That 75% drop means that a $100 investment in this company will leave you with $25 today, all in the space of a few weeks. So who are the indirect losers of this situation? Almost every industry is struggling because of the pandemic. The Dow Jones, which is commonly used to measure the health of the stock market, is down 26% this year, while markets in the UK, Germany, Hong Kong, and Malaysia are down 11 to 26%. You can watch our video about index funds over here. Having said this, now seems to be the perfect time for those of you who are looking to invest. National Economic Council Director Larry Kudlow told CNBC that if you're an investor, you have to have a long-term view because the stock market is a lot cheaper than it was 1 or 2 weeks ago. Bush's Daniel Ives said that this outbreak represents a golden opportunity to invest in stocks that we think are long-term winners. The good thing about hitting rock bottom is that the only way is up. But it is impossible to tell where the bottom is. Nobody knows. So what can you do in a market downturn? The first thing you can do is keep calm. If you're invested for the long term, hold it and don't sell. If you, like us, already have some investments in the market, now is not the time to panic, especially if you're in it for the long haul. While we may not know what's going to happen in the short to medium term, the long-term vision is pretty straight-cut. Markets always recover from a downturn. It's a cycle. Remember that we are in a marathon, not a sprint. Selling your long-term investments now means that you're locking in your losses and you won't be able to reap the benefits of the rebound. Yes, you could sell it all off now and buy it at a better price, but do you know exactly when the time will be right? Think about it this way, stocks are a lot cheaper now. A month ago, one share in Apple would cost you $320. Now, you can buy it for only $248, a 23% discount. Apple is still the same company. Remember, time in the market beats timing the market. The second thing you can do is that if you haven't started investing, now is the perfect time to start. For those of you who have been hesitant to enter the stock market, now is the perfect time to do it. The market downturn caused more than a 25% decline in 2020, which means that financially strong companies with a solid foundation can be bought at a discount. Personally, we don't think that the market has reached rock bottom and prices could still fall. But this doesn't mean that you should be waiting before you buy, especially if you're new and you have little to no knowledge of financial markets. Anyone who says that they know where the bottom is, ignore them. The third thing you can do is to smash that like button and subscribe to the channel so that you don't miss our videos. No, but seriously, the third thing you can do is to stock up on your financial education. There's a saying that goes along the lines of, they can take away your money, your house, and your business, but they can't take away your knowledge, your skills, and your insight. So this is the perfect time for you to stock up on your financial education so that you can handle situations like this much better. Some topics that you can consider studying are the history of pandemics. Study the history of the Spanish flu or SARS. You can also study the history of economic crashes like the Great Depression and the 2008 financial crisis. These things have happened in the past, and over time, things got better. And this pandemic will be no different. So start studying history so that you can identify the signs of when the situation is getting better or getting worse. There are tons of great YouTube videos that you can watch on these topics, and they are also very entertaining. So stock up on your knowledge. The fourth thing you can do is cut back on spending and save as much as you can to invest. In our previous video, we mentioned that it's not our style to cut down costs to a bare minimum just so that we can retire at 40. We're gonna put that statement on hold for now because if there's any time to do it, it's now. Other than cutting down on costs, it's also a good time to look at growing your income. The market downturn gives us two reasons why we should do these. The first is ensuring your rainy day fund. Having an emergency fund is key and it's great for times like these. Before even thinking about investments, we recommend having a 3 to 6 month emergency fund before you start. The last thing you want to do is sell your investments and lock in a loss. Once you got this sorted, now we get to the fun part. The second reason is that it is time to buy. We're not advocating buying stocks just because they're cheap. That's speculation. What we're looking for are companies that have strong fundamentals that are selling at a discount just because of the panic. Examples of this are Microsoft, Apple, and Google. These stocks are all down 20% from their previous highs, yet there is no drastic change on how they do work and how they solve problems for billions of people across the globe. Other than that, we're also looking at companies who've taken a direct hit or are direct losers from this pandemic. For example, Delta Airlines is down 50% since January. This is because the virus has decreased demand for their air travel. But will the drop last though? Once the pandemic fades away, air travel will continue as normal. There are definitely risks that these companies will never see the light at the end of the tunnel, which is why it is important to identify companies that have a large amount of cash reserves and very little short-term debt. These stocks tend to go up the quickest after a recession as people start to book their travels after a long period of social isolation. There are two camps recently on social media, with Tesla CEO Elon Musk advocating for stocks that benefit from this like Zoom or Slack. On the other side of the ring, legendary investor Warren Buffett puts his money in companies that took a big hit from the pandemic like Delta Airlines and Royal Caribbean Cruise. So which side are you on? The bottom line is that the market has been battered this year due to the virus. The million-dollar question is, will it be short-lived and recover quickly after containment? Or will it be a catalyst to a market recession that would mark a longer horizon of economic depression? Who knows? Since we're not professional traders, financial analysts, or politicians, let's leave it to them to work things out. What we can do is continue our long-term investing and cut down on costs so that we have more cash on hand to go bargain shopping. For the next few months, shopping will look a lot less like this and a lot more like this. So that's it for today on the TMF Show. If you found this helpful, give it a thumbs up and make sure you hit that subscribe button and the bell notification icon so that our videos go straight to you. Let us know down in the comments, how do you feel about the current situation of the virus? Until next time, my name is Ed Lee and I'll see you in the next video.